Welcome to MWN Publications. We are happy that you are joining in this program. In this program, we are going to give a short video related to the topic concerned with the introduction of accounting, that is basics of accounting. I am going to teach the subject accounting for decision making. This is in the first semester of M.B.A. 2023. Let me explain about the Unit 1, Financial Accounting, Introduction to Financial, Cost and Management Accounting, Generally Accepted Principles of Double Entry System, Preparation of Journal, Ledger, Trial Balance, Preparation of Final Accounts, Trading Profit and Loss Account and Balance Sheet, Reading the Financial Statements. These sections will be explained in 3 videos. My Facebook, M.Wilson MW, YouTube, MWN.com. Please follow that. Let us study some aspects of the introduction in fundamental principles of accounting. First of all, history of accounting. History of accounting is traced back to the period of the introduction of money. When money is introduced, this accounting system emerged. There are evidence that accounting was applied 23 centuries ago from the books entitled Arthasastra, written by Kautilya, a minister of King Chandragupta. In ancient days, accounting was in premature stage. The number of transactions during these periods were very few. Hence, it could be operated and checked by the proprietor himself. We see that in the monarch or kingdom, there is need for maintaining accounting because there are income received through taxes and other collections and expenses for some ministerial expenses, military, and for some social purpose. The accounting based on double entry system was the first introduced by Lucio Paciello of Italy in 1494 through a book entitled Principles of Double Entry System. The use of accounting has become most common due to the growth of industries after the Industrial Revolution took place in England. Then let us see the definitions of accounting. We are going to see 2 definitions. First one is the American Accounting Association defines accounting as a process of identifying, measuring, and communicating economic information to permit informed judgment and decision by the usage of the information. Then second definition is the American Institute of Certified Public Accountants. It defined the accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the result thereof. So writing only the transactions related to money directly or indirectly, and then that analyzing the character and interpreting the results. According to the definitions, the functions of accounting is stated in as follows. The first one is recording of transactions. The basic function of accounting is recording of transactions associated with money. Journal is the primary book to record the transactions. The transactions are written from journal to the secondary book called ledger. Hence, journal is called primary book. Then classification of transactions. The transactions are classified according to different common accounts and posted to respective accounts. All the classification is done in a ledger. The transactions recorded in journal won't give a clear idea about the total transactions in a year, but it can be easily identified from the ledger. Since there are a lot of transactions available, it is classified means it will give a clear picture. Then third one is summarizing the transactions. In a ledger, classified accounts are summarized and the balance of each account is calculated. all the balances are transferred to an account called trial balance. Final accounts, that is profit and loss account and balance sheet, are prepared on the basis of the trial balance. Okay, from the transactions recorded in primary book, then to ledger, then from that balances derived, from that trial balance to be prepared, from the trial balance final accounts, profit and loss account and balance sheet should be prepared. So keep in mind about the journal primary, ledger secondary, that classify and contest the whole transactions in the primary book of journal. Then it is put, the balance are put into trial balance. So altogether there may be 20 or 30 accounts only, though there may be lakhs of transactions. From that final account should be prepared. Then interpretation on the basis of trial balance, trading account, trading profit and loss account, balance sheet are prepared. These statements give a clear picture about the profit of the company and the strength or state of affairs of the company. The information is used for future planning and decision making. Profit or loss is known from trading profit and loss account, and the financial strength and assets and liabilities are known from the balance sheet. Let us study what is bookkeeping. Bookkeeping is defined as the art of recording the business transactions in a systematic manner in the books of accounts. A bookkeeper is responsible for keeping all the financial records. Hence, the work of the bookkeeper is a clerical in nature, but clarity, and he should follow certain system of record. Now let us see the definitions between bookkeeping and accounting. Bookkeeping is mere recording of business transactions. Accounting is concerned with the formulation of a system of records, preparation and interpretation of results. Then second one, bookkeeper is responsible for keeping all the financial records, but it is not the duty of the accountant for keeping all the financial records. An accountant often reviews and directs the work of the bookkeeper, but the bookkeeper cannot direct the work of accountant. So an accountant requires more skill and knowledge than the bookkeeper. You can keep in mind about the bookkeeper is writing the primary things and all, and the accountant see the technique in the preparation and find out any errors committed and involved in the rectification of that. Now let us study about the objectives of bookkeeping and accountancy. So there will be some objectives for any work, all work. Here accounting also have some objectives. That are: one, to find out the profit or loss of a business, to find out the asset and liability position of the business, to provide information to management for decision making, to know the details about the amount due by the business to various parties. That means how much amount to be given to various parties by the business, and the amount to be received from the various parties. Fifth one, to provide information about the business to the proprietors, partners or shareholders. Information should be provided to the owner, then means partner in the form of proprietor, partner, shareholders, to know about the stock position of raw material, work in progress and finished goods. Seventh one, to know the detailed information about the capital employed and the rate of return on the capital employed. The amount is invested in the business by the owners as well as borrowings, and what would be the return should be known. Eighth one, to find out whether errors or fraud are committed by the employees of the concern. Some errors might have been committed, fraud may have been committed. That should be found out. Then to provide information to taxation authorities. Okay, thank you very much. The rest of the thing you can learn in next videos.